Hello everyone, it's Joel Schemmel with the Sarasota Group at Premier Sotheby's International Realty. I wanted to take a few minutes right now to give you a snapshot update of the market for the second quarter of 2022, mostly in comparison to last year, 2021. We know things are changing out there. So just looking at the number of properties that have sold in the different price categories, and again, we're looking at the markets from 1 million up. What's interesting in the single family homes, kind of in all price categories, 1 to 2 million, 2 to 4 million, 4 million and up, we really aren't off that much year on year by number of sales, so a few percent one way or the other. If we look at the same price points in condos, we see that the numbers in 2022 are lower than in 2021 in a couple of price categories. The over 4 million market, sales are down almost 70%. In the 2 to 4 million range, down almost 50%. That is skewed, unfortunately, or there's a reason for that, and that is in 2021 we did have the Ritz building that closed in downtown Sarasota, as well as the Boulevard building. So there are a grouping of sales in that first half of 2021 comparatively. So again, it looks a little odd percentage-wise, but that is what the cause of that is. I think the dynamics of the market, what has changed is really inventory levels. So if we look at inventory of properties available as of June 30th of 2021 versus 2022, that's where we're really starting to see the change. So for single family homes 4 million and up, that inventory level has increased by 140% year to year. In the 2 to 4 million, almost a little over 90%. In the 1 to 2 million, over 130%. So again, some big shifts in inventory levels. Really similar with condos, over 4 million, almost 90% increase in listings. 2 to 4 million, somewhat flat, but 1 to 2 million and up 82%. It doesn't mean a drastic shift in the market. The inventories last year were super low because of all the sales. So we are basically shifting to a somewhat more normalized market where we have a starting of an equilibrium between demand and supply. So again, year to year, the months of supply of inventory has, because of that, popped up this year across the board, at different price points, usually at least 100% up in month supply of inventory comparatively. And again, that's just because those inventories are growing. What does that mean when it boils down to the nuts and bolts of the market? Certainly for buyers, that means there are more properties coming on the market. It will mostly mean more choices for those buyers. Probably not drastic change in prices, but again, more inventory, more choices, and buyers can be a bit more selective as they move forward in the market. The flip side of that is sellers, where it's been a seller's market, quite crazy seller's market for the last couple of years. It is normalizing, so sellers are going to have to factor that into the equation, and that means more normalcy, more patience. Obviously, higher price point properties tend to take longer to sell. Obviously prior to COVID, properties in the luxury market, 5 million and up, it may take 6 months, a year, even 2 years to sell. I'm not sure we're there yet, but it is starting to normalize, and it will start to increase days on market to sale. So again, different impacts for buyers and seller, but that's just a high level synopsis for you to digest. Again, hopefully it was helpful. Joel Schemmel with the Sarasota Group at Premier Sotheby's. Thank you.